In this video, we are going to discuss about different kinds of borrowing facilities granted by banking sector. So first we'll see the introduction part. After that, we'll see the different kinds of borrowing facilities. Introduction: bank loans and advances. For every business organization, we know that money is a very important essential element, because the reason is it fulfills the short term and long term requirements of funds. And very important thing is, for a business person, it is not possible for the owner to bring all the money himself, right? So that is why the business people are rendering the banking sectors to avail the loan facilities. While availing the loan facilities, they are improving their performance, and also they are giving employment opportunities to other people. So money is very essential element for any business organization. In this slide, it shows you the different kinds of borrowing facilities which are granted by the banking sector. So first, banking sectors are classifying their loans and advances into two main categories, that is loans and advances. Under the advances category, again it is classified into 5 different heads. One is cash credit, overdraft, bills discounted, bills purchased, and letter of credit. So we'll see one by one. First we are going to discuss about loans. Loans: when a fund is borrowed by an entity or business or corporation or an individual from another entity, repayable after a specific period carrying interest rate, is known as loans. The main difference between loans and advances is the duration. So here the loans will be provided to the another person for more than 1 year. And also the general loans will be granted by the banking sector as well as the other financial institutions. So before lending loans towards their customer, the lending institution, that is banks and financial institutions, will check the credit report of the customer. So while go through the credit report of the customer, the lending institutions can easily identify their customer's creditability, financial position, and what is the capacity of that particular person to repay. So loans means it will be borrowed by an entity from the another entity, and it will be repayable only after 1 year. So that is why here loans are classified into 3. One is short term, second one is medium term, and long term. Short term means when a loan granted generally for a period of less than 1 year will be called as a short term loan. Medium term, a loan period will be starts from 3 to 5 years. It is known as medium term loan. Long term loan will be beyond the 5 years. So it's ranging from 5 to 15 years. It termed as a long term period. So customers will be borrowing their loan facilities from banking sectors by pledging their movable and immovable properties towards the banker. So when they are comparing the interest rate with the advances, loans interest rate will be little higher. Moving on to the next slide. So the second category is advances. Advances: funds provided by the bank to an entity for a specific purpose to be repayable after a short duration is known as advances. So here the banking sector alone will be providing the advance facilities towards their customers for a specific purpose. Specific purpose means it will be to meet their short-term financial requirements. So for that purpose, the banking sectors will be providing advance facilities. So it is a credit facility which will be repaid within 1 year. So as I told you, loans will be more than 1 year. The repayable period will be more than 1 year. Here advances will be repaid within 1 year.